For more than a decade, Toronto's housing market has been portrayed as an unstoppable juggernaut, a place where prices always rise, where every correction is a buying opportunity, and where owning a home is both a necessity and a badge of success. Yet beneath that glossy confidence, the numbers tell a different, more sobering story. When income levels, debt rules, and mortgage math are brought into focus, Toronto's real estate market looks dangerously detached from reality. So much so that it may need to fall by nearly half to restore true affordability. At the heart of this disconnect lies a simple but undeniable fact. The typical Toronto household earns far less than what is required to purchase a typical Toronto home. According to the Canada Mortgage and Housing Corporation (CMHC), the median household income in Toronto is around 97,000 Canadian dollars per year. Financial institutions use what's known as the gross debt service (GDZ) ratio to determine how much of that income can safely go toward housing costs. Under federal lending standards, that ratio ranges between 32 and 39%, meaning that no more than one-third of a household's income should be spent on mortgage payments, property taxes, utilities, and insurance. When we apply these rules, the math becomes clear and alarming. A household earning 97,000 Canadian dollars can safely allocate about 2,600 to 3,100 Canadian dollars per month toward total housing expenses. Assuming a 20% down payment, a 25-year amortization, and a 4.4% mortgage rate, this allows for a maximum purchase price in the range of 450,000 to 5,170,000 Canadian dollars. That's the price range a median income family can afford without overstretching or violating lending criteria. Now compare that to reality. The average selling price in Toronto, as of mid-2020-5, stands near 1.12 million Canadian dollars, while the MLS Home Price Index benchmark sits around 1.0-6 million Canadian dollars. Detached homes fetch even higher prices, exceeding 1.2 million Canadian dollars in many areas. The gap between affordability and actual prices is not a small distortion, it's a chasm. Homes in Toronto are now priced at roughly double what local incomes can support under prudent financial standards. If we take the affordability-based value of roughly 500,000 Canadian dollars as the fair median, today's market appears overvalued by around 50%. In other words, home prices would have to fall by half to align with what the average household can reasonably pay. Even under a more generous model, one that assumes two incomes, higher debt tolerance, or slightly lower interest rates, the market would still need a 30 to 40% correction to restore balance. Such a scenario may sound extreme, but the economic pressures are mounting. Interest rates are no longer near zero, as they were during the pandemic-era buying frenzy. Mortgage renewals are forcing thousands of homeowners to face sharply higher payments, in some cases doubling their monthly costs. Wage growth has lagged far behind housing inflation, and with household debt levels already among the highest in the G7, there is little capacity left for further borrowing. The result is a market stretched to its breaking point, held aloft not by affordability or fundamentals, but by psychology and fear of missing out. Yet, as rates remain elevated and incomes stagnate, even optimism has its limits. History shows that when affordability collapses, prices eventually follow. If Toronto's housing market were to realign with its economic base, with incomes, debt ratios, and lending norms, it could mean a decline of 40 to 60% from current levels. Such a correction would be painful for investors and homeowners, but it wouldn't be irrational. It would simply bring prices back in line with what the city's residents can truly afford. For years, the narrative has been that Toronto real estate never falls, but math has no emotion, and sooner or later, it demands equilibrium. When it comes, it won't be the end of Toronto's housing dream, only the end of its illusion. If you found this analysis insightful, don't forget to like, comment, and subscribe to our channel for more in-depth reports on real estate, economics, and the hidden forces shaping your financial future. Hit the notification bell so you never miss a new upload.